Malaysian corporate earnings in 2015 is expected to grow 10 to 11% based on analyst consensus. But asset management company Eastspring Investment Berhad believes that the actual growth rate will come in lower. Chief Investment Officer and Country Head Chen Fan Phai said this is because analysts are generally more optimistic in the beginning of the year and will later revise their forecast downward. This year, initial consensus pegged growth between 8 and 10%, but has since been revised to 3 to 5%.
Still be very much driven by the ETP projects rollout. As you saw in even the announcement in the recent budget, right? More projects, huge projects are being announced, and this will obviously have a trickle-down effect. Okay? But other than that, in terms of consumption and all that, we actually think that consumption will it's still growing, but slightly to slow down because households are not. In terms of the cost of living is going up quite rapidly, and then with the onset of GST and all that, it will have impact on the consumption part.
While consumer sentiment is expected to dampen in 2015, Malaysia may also lag behind other Asia-Pacific economies in the years to come.
If you take the view that the region as a whole is moving towards a more stable environment, and growth is going to come back, leveraging from the developed economy, then the likelihood is that some of our neighbours will do better than us.
This is because the Malaysian economy is considered low risk among Asia-Pacific countries and is commonly a defensive play. For this reason, if the market outlook becomes more volatile, investors may flock to Malaysia for safer bets.
If let's say there's uncertainty on this region and as people perceive this region as high risk in investment, normally the fund will flow back into Malaysia.
Eastspring today launched its Asia-Pacific ex-Japan Target Return Fund in Kuala Lumpur. It is an open-ended fund targeting a net asset growth of at least 8% a year over a 3 to 5 year period. Janice Tian, The Edge TV.